Richard Dean, Brandy Scott and Tom Urquhart.
Right, Dubai's property markets witnessed its highest quarterly capital gains in a decade in some areas in the last quarter. Now, that's according to a ValueStrat report that will be released later today. We are taking a lucky first look at it this morning with their Head of Research, Haider Tuaima. Haider, good morning. Thanks for joining us.
Good morning. Thanks for having me.
And thank you for giving us an early glimpse at this report. Let's start with those quarterly capital gains. What have you seen? Give me the numbers.
Right. So the VPI, which is a valuation-based price index that we update on a monthly basis on the Dubai real estate market. In the last at least couple of years, we used to seeing quarterly gains of anywhere between 3 and 5%. But for Q3 this year, and for the first time, we have seen a 6.1% capital gain, just quarter on quarter.
Right. So let's put that into the areas that people will understand. What have you seen, for example, in the capital gains in residential?
So in the residential market, as I mentioned, is 6.1%. This is according on normal villas and normal apartments. If we look at the prime market, actually it's gone a little bit faster at 6.6%. This index is basically a 100-point based index. So what we are saying is that back in 2014, if a property was worth 100, how much is it worth today? So generally speaking, with the market today, it's worth 96.6 points. With the prime market, it's worth 106.2 points. But then the devil's in the details when we break it down into villas versus apartments, and that's where we see a huge difference between the villa market and the apartment market.
Okay, so where are we in those markets, villas and apartments, compared to the 2014 peaks?
Okay, so compared to the 2014 peaks, it's very interesting. Of course, the villas have fared much, much better than apartments. Apartments are still below their 2014 peaks, and this is including Palm Jumeirah. So Palm Jumeirah apartments, now we have to stress on apartments, are still 16.6% below their 2014 peaks. If we look at villas, most of the areas that the ValueStrat price index monitors have actually surpassed the 2014 peaks. And the star of the show is Palm Jumeirah. So we're talking about villas on the fronts of Palm Jumeirah. On average, it has surpassed those previous peaks by 42.5%. This is followed by Emirates Hills. It surpassed the peaks by 24.1%. Jumeirah Island, 6.4%. The only couple of areas that we monitor that haven't yet surpassed those peaks are Jumeirah Village. So we're talking about townhouses in Jumeirah Village Triangle and El Forjan Villas. These areas are still below the peaks. Apartments in general, as I mentioned, are still below their peaks.
Okay, and what are we seeing in terms of new supply coming on to alleviate some of that? I was really taken by your figures of what developers thought they would hand over this year compared to what's actually been delivered in the first 9 months.
Right. So at the moment, when we're talking about supply, usually in the beginning of the year, we mention a big number because that number we get from the developer schedules because we can't really guess exactly how many properties will actually be delivered. So we were looking at 54,000 units to be completed by the end of the year. And this was an estimation that we put at the beginning of the year. From that number, we are looking at about 44% of all of that number being actually handed over. So 21,500 apartments and about 2,000 villas have actually been completed in the 9 months of this year.
Okay, what does that mean for supply for the market as a whole?
So in the next 5 years, at least based on the projects that have been announced, and we're only looking at under construction projects. This is not even including projects that are still in, let's say, in the planning phase or in the design phase. we're looking at active construction. In the next 5 years, we can expect more than 100,000 residential units.
Okay, let's look at one of the other findings of this report, Haider, which may be a knock-on effect. You're seeing increased demand for cheaper apartments. Talk me through that.
Yeah, so the market has been shifting, basically downsizing. So instead of looking at villas and townhouses or large apartments, the interest now is towards the smaller apartments, and this is mainly due to affordability. So investors trying to get into the market cannot no longer afford the larger properties. So therefore, there is a movement towards apartments, and that movement only began just this year. Since the pandemic, apartments are very much still more or less affordable. Some of them haven't even changed in a considerable way when you compare it to pandemic time. So the investors are finding it increasingly attractive to get into that market, and they are, with the rents rising, they are actually giving the investors very generous yields.
30 seconds, super quickly, on the rent front. Villa rents, a sign of stabilisation?
Yeah. It could be. We've actually said that. We had a review outlook report we released last year, and we did say that rents may stabilize by the end of this year. I can't believe, even by seeing the numbers, that this actually is happening. Yes, it's possible that villas have reached their rent ceilings or price ceilings.
There you go. First sort of no movement number after a 33-month rally for villas. That's the Value Strat report. It's going to be released a little bit later today. We have been speaking to their Mr. Research, the man who puts the numbers together, Haider Tuaima.